Hello everybody, this is Jim at freechartvideos.com, where we use time-honored techniques to try to make sense out of modern markets. This video is for educational purposes only, and it is not intended to be used as any form of investment advice. I can draw lines on charts, but you and only you can draw your own conclusions from your own due diligence and make investments. You know what I'm trying to say. And make investment decisions that are suitable for your financial situation. I'm not a licensed professional. I'm just a professional voiceover artist. So, no, I'm a guy who draws lines on charts. Use your own due diligence. Let's look at the S&P. Pardon me while I brag just a little bit. In yesterday's video, I said I thought that this blue line should serve as support. And looky there. Early on, briefly dipped just below it, and then headed back up. So I'm thinking that this may have been a short-term bottom right here, down at this 1250 level. And again, I remind you that that level, see this little pink line down here, that level was predicted by this pattern. There was a triangle bounded at the top by this blue line and at the bottom by this red line. So once that broke down, how do we measure that? Well, we take a measurement off the first reactive move in the pattern, and then we add that to where it breaks out or breaks down. That gives us this level here. That was met. Now, those of you who are astute at chart reading will also recognize that we had this little inverted head and shoulders pattern that points to about 1324, 1326. Let's call it the mid 1320s. You know, you can't get so accurate. I love these Elliott Wave guys who say, well, I expect a retracement here to 1237.826379. Excuse me? There's no way. So anyway, here's the deal. We had this pattern that set up what is looking more and more like was a, between this line and this line, a potentially a bull flag. We'll know for sure if we get up over this red line in one of the next few sessions, or if we just continue maybe to ride this thing up. You know, I don't really think so, because I don't know that there's enough, what's a good way to put this? I don't know that there's enough movement in the markets if we hang on the underside of this line. I guess it's possible. That sure takes that sure makes for a very lazy market, because this line is only going up about 2 points per day. So I just don't think the markets are in for that kind of a lazy drift up. I suspect we're going to get batted around a little bit here, but I'm still thinking that this is a strong market. We could see how it just keeps on rebounding, and so I'm reluctant to be short. I am net long and cash as a small hedge, if you can consider cash a hedge. So anyway, that's what's going on with the S&P. That this line that we expected as resistance served as resistance. This line that we expected as support served as support. So does that mean we're range bound for a while? That's a possibility. But what I'd really like to see, though, I really would like to see this line right here get taken out. I think it's possible, but we'll know one thing for sure. If this red line gets taken out, folks, you better if you're short, you better be careful, because if this gets taken out, then the next area of resistance is going to be well up into the mid 1300s. So this is really about the only thing we got going right now. Again, I remind you of this little inverse head and shoulders that that we have not reached yet. Could reach it here in the next couple of days and even stay under this line. But again, I make mention of the fact that I just don't know that this market is willing to go sideways in that tight of a range-bound, in that tight of a range. My feeling is that it's either going to bust up for a good-sized move up, or it's going to bust down for a good-sized move down. But what does the technical analysis tell us? Well, it tells us to expect this to be met in the mid-1320s. It also tells us this line is working as resistance, and this line is working as support. So there you go. Strictly speaking, in terms of technicals, it says sideways. But something about that doesn't seem quite right, and I can't tell you what it is. I guess it's just the fact that there's been so much volatility lately. It's hard to imagine this market just, for the next 5, 6, 7 sessions not having much more than about 10 points of play in it. That just doesn't seem right. So anyway, that's the S&P 500 update. Again, when you get a chance, I'd appreciate it if you'd stop by freechartvideos.com, where we use time-honored techniques to understand modern markets. And if this video is doing you any good, if these videos are doing you any good, it's it's almost the end of March, and I've been doing these now since early October. So you've gotten 5.5 months of is that right? Yeah, about 5.5 months of free chartvideos.com. So if it's doing you some good, I've got a video offer where you can come and if you donate $10 or more to the cause, I will send you the links to a video that was produced on the 18th of March that has some nice charts in it. This can help you brush up on your chart reading skills and do some due diligence on these companies, and there might be some winners in there. So anyway, take care. Thanks for watching, and there will be another video tomorrow.